analyst at PL Capital Group, talking about what to actually make of the EMS sector right now. Praveen, hi, morning. Great to have you today on ET Now. Thank you so much for your time. I want to first talk about whether EMS as a sector has entered a phase where investors are focusing more on cash flows and working capital rather than just top-line growth. How serious is the stress across the sector as we've seen play out in this quarterly performance?
Yeah, thank you for having me on your channel. So first thing, rightly you highlighted, now we are looking at more on the balance sheet and the cash flow rather on just on the growth in the revenue or the profitability. So why? Because now the EMS companies or the sector is going for a heavy capex the way forward. The all companies are venturing out in the different segments, and so for that we have to be very cautious on how much of the capex they are doing and how the balance sheet is supporting to them, and whether they are generating the cash out of that or not. Because here, not only the capex, the working capital requirement is also huge. As and when you move towards some critical components or the critical sector, your working capital also gets stretched. So that is the one. Second thing is because of the international, uncertainty and the supply chain disruption, the key raw materials or the semiconductor related component or chip related components, there is some inflationary pressure is also going on. So for that, some players are also building the inventories. So it is a very important to look at how they are managing their balance sheet capex program with the keeping their growth intact. So that's the key for EMS players right now. If I just highlight few of the players like Amber, one of them, which is again venturing out very aggressively in the electronic segment, EMS segment, and a lot of 3-4 acquisitions, JVs they had created. Now that's a benefit they are going to receive in this financial year with the consolidation. Definitely, there is a margin contraction because of inflationary pressure on the key raw material of a PCB, PCBA. But as they are entering in the high margin segments, like a power on or a Unitron, which is of the high margin business, I don't think there would be a YOY contraction in the margin for them. Also, because the RAC is doing well due to summer. So for that, being the largest player in the manufacturing space in the RAC, they are the one of the beneficiary of that. Second, there is a regulation on the compressor import. That's also somewhere going to benefit the Amber in the due course. So I think Amber is somewhere is better placed as compared of the contract manufacturing space. If I look at Even if I look at on the, as you already highlighted, Syrma did very well in the entire quarter. And from the last couple of quarters, their performance is outperforming the entire sector in the EMS space. So that's more than a 50% of growth for a quarter. So I think the only concern investor need to look at is on the valuation right now. So
yeah,
going
extremely,
beyond
very,
40
very
times.
expensive. And I guess that leaves a lot of scope for disappointment as well. But, since you're talking about these individual stocks, I want to firstly talk about Dixon, because that remains optimistic on the Vivo JV, on the volume growth, but margins are under pressure there as well. Can the company sustain profitability amid high memory prices, PLI withdrawal, and delayed backward integration benefits?
So one of the challenge definitely Dixon is going through. And just to clarify before giving the view, that we don't have a coverage on the Dixon. We don't have a house view. But if I look at their commentary on the growth of 15% of odd X of a Vivo is doable. And the other verticals also they are ramping up apart from the mobile. Now, for them is a key trigger for a high growth is a Vivo JV or HKC, which JV which has already in place that will bring the volume to them. The way forward, the margin definitely is one of the key challenges for them. They had also highlighted in their call that because of the inflationary pressure, especially in the semiconductor component and the chip-related memory devices, definitely the margin pressure would be there. But to some extent, with the diversification in the segment-wise, as well as if the volume to kick in what they are talking about, they can mitigate that risk of margin pressure. The
Right.
one good part for them is they are well managed in terms of balance sheet and the cash flow. For them, the only thing is key monitorable is the two things. One is the Vivo JV, and the another is your how they are managing their margin profile.
Praveen, what about Kaynes though? Because that's seen a very sharp miss versus the guidance and the rising working capital days and negative, commentary as well is coming in. And of course, negative cash flows too. Does this raise concerns over execution and, earnings quality despite a strong order book?
Uh, so uh, for last year, the one segment, because if you look at the Keynes, every year there is a new segment, new business drive their growth in the top line. And the last year has been the smart meter. Now that smart meter, the business is like that. There is a stretch in the working capital. And definitely, like for the past quarter, couple of quarters, if I look at, they are in the difficult scenario because of a smart meter. Now, the way forward, as and when the smart meter contribution is going to reduce, and what they are talking about, their working capital to get normalized. They are talking about next 3 quarters from here onward. They will take to correct their working capital at the normalized level, or to the 60-70% of a correction in that. With the as we are seeing, there is some delay or the some reduction in their order book as well on the sequential basis we had seen. And that's because of the smart meter business is going down. And that's I treat as a good for them. But definitely for the free cash flow, they need to wait for a year time, I believe.
Understood. Praveen, great to have you today on the show. Thank you so much for joining in with that insight on what to do with EMS after the recent, earnings and the correction.